This video goes into how you can invest in index funds through your company or corporation, the different tax implications, and my personal favorite index funds that I invest in for the long term. Now, if you're new to my channel, my name is Koukun and I'm primarily a real estate investor. However, I've started to invest in index funds myself. I also run a real estate team that helps investors buy and sell rental properties. So if you're interested in learning about more of what we do, check out the links in the description. All right, so if you clicked on this video, I'm guessing you either own a company or corporation or are interested in having one in the future. This may include if you already have an incorporated small business that has some retained earnings you'd like to invest into index funds, or maybe you're a real estate investor that has a corporation that owns some rental properties, but you're looking to reinvest some of your cash flow, or maybe you've taken out a refinance against one of your rentals, pulled out some equity, and you want to redeploy it into some index funds. Now, before we get started, if you already own some index funds, let me know in the comments below which ones. I'm curious to know. Now, for those of you just getting started in investing, an index fund is an investment that tracks the stock and bond markets. Basically, it follows an index, which is a collection of stocks or bonds. And the goal is to try to give you the average return of any given stock market. A popular one would be the S&P 500, which is an index that follows the 500 largest companies in America. So an index fund of the S&P 500 would be a fund that tries to track the performance of those same 500 companies. The key difference between an index fund and your typical mutual fund is that there's no investment manager that's trying to beat the market, pick the winners and sell the losers. Basically, it's a fund that tracks the index. As a result of that, you get the average return with much lower fees. In Canada, the typical mutual fund fee can be anywhere from 2 to 2.5%, while a comparable index fund may have a fee as low as 0.25%, close to 90% less. So that's why when you look in the long term, most mutual funds, 90% plus of them, never beat the index that they are comparing themselves to. This makes investing in index funds a winning investment. Now, to get started in investing in index funds through your corporation, the first thing you need to do is to open a stock trading account through your company. So basically, you would use a stock trading platform such as Questrade, which is the one I personally use, and you would open up a stock trading account. However, instead of it being in your name, it would be in the name of your company. So you would have to upload several documents that pertain to your company, like the articles of incorporation, who's the owner, who's the director, right? They will ask you the standard form, so you'll need to provide that. And once you're done that, you can buy and sell stocks or index funds through that account at Questrade or any other stock trading broker. Again, this is the same as any regular stock trading account, except that it's in the name of the company. Now, the reason you want it to be in the name of the company is if, for example, you as a person open a non-registered stock trading account in your name and you transfer your company's money into your account, it may be looked at by the CRA as a withdrawal from your company into your personal name, and then you will be taxed on that withdrawal. So you definitely want to avoid this. By transferring it into a company stock trading account, it stays under the umbrella of the company. Therefore, there's no tax incurred simply by that transfer. Now, speaking of taxes, that is one of the key reasons you would want to do this strategy instead of taking the money and investing it in your own name. By keeping it under the umbrella of the company, for example, here in Ontario, an active business only pays 12.2% tax on the retained earnings in the business, meaning you can just pay the 12.2% tax, have the money invested in index funds, and allow it to grow and compound over time without having to pay income tax on that same money. Some of the important things to consider when investing your money through a company is while you may save tax upfront in the beginning because you're not paying the money to yourself, the growth on that investment is taxed at pretty much the highest tax rate. So for example, if you get dividends or interest, those are considered passive income within a company. So it's taxed at almost 53% here in Ontario. And if you have any capital gains, that's still taxed at the highest possible capital gains rate, which is currently around 26%. So it may be advantageous when you get started, but over the long run, you do end up paying a higher tax rate on the growth of those investments. Now, to complicate it even further, if the same company that owns those passive income investments in the company is paying dividends out to you as the owner, there are some tax benefits. So even though you pay the highest tax rate within the company, you're able to claim a refund and essentially bring it down to your personal tax rate. Again, this becomes a very complicated calculation. I'd recommend working with a good accountant who can sort of work these out for you, but it's very complicated to figure out ahead of time. Finally, let's discuss the investments that I personally hold in my corporate investment account. I personally own 2 index funds. First is HBB, which is the Horizons Bond Index Fund. This fund is what's known as a swap-based index fund. So even though it tracks a bond index, the way it's structured is that it doesn't actually pay you any interest. So even though as a bond would typically pay interest, what happens is within this structure, it essentially grows in value without paying anything out to the owners. And the reason I did this is it has a very unique tax benefit, especially for investors who own it within a corporation. Since in a corporation, the capital gains rate is half of the income, passive income rate. By converting the interest into a capital gain, I'm deferring the tax to when I sell this index fund. And even when I sell it, it will only be half of the rate that it would be had I received it as interest along the way. So there's a huge tax benefit. The fee of this fund is at about 0.27%, which is a little bit higher than your typical bond index fund. However, I think the tax benefit more than makes up for it. The second index fund I own is VEQT, which is the Vanguard All Equity Asset Allocation Index Fund. Now, if you watched some of my previous videos on VGrow, it is the same type of investment, except that this one does not hold any bonds. It is a pure equity index fund. Horizons does have that swap-based index fund for equities as well. However, I found their product to be inferior to the Vanguard index fund. So even though the Vanguard index fund does pay dividends that will be taxed at the passive income tax rate, I still found it to be a better product, better diversified, and better exposure to the different, the US market, the Canadian market, the international, and the emerging markets. I found it to be a well put together product. So I prefer this instead of the Horizons equity product. And this particular index fund also comes with a very low fee of 0.25%. And the beautiful part about this is it owns all the different areas of the world, right? The US, Canada, international, and emerging markets within sort of a set parameter as to how much they want to put in each. And one of the best parts is it automatically rebalances between these categories. So for example, like in the last year, the US portion has grown significantly. So what will happen is that instead of continuing to increase the US portion, they will start to put some of those profits into the other areas so that you don't get overweighted in a certain area versus another. And it's a nice feature that happens just in the background. I don't need to buy or sell anything. It just happens within this fund for that low management fee of 0.25%. I'll put the link to the websites below for both of these index funds so that you can read further. Now, just as a disclaimer, I'm not a financial planner. I'm not an accountant. These are just my own investments and my own opinions. Please, consult a professional before making any investment decision. And I hope you found this video helpful. Definitely, let me know if you have any questions below. If you like this video, give us a thumbs up. If you like this type of content, definitely please consider subscribing. Until next time, all the best.